Hi, this is Roger Balzer. Welcome to our 2-Minute Tuesday for January 30th of 2018. Our title for this week is Correction or Bear Market. Since last week's 2-Minute Tuesday, I've received a number of questions concerning the market. While there were many questions, most dealt with how can we spot an impending correction or bear market. First, a 5% correction can happen at any time for any reason. No one can see this coming. In my opinion, a 5 to 10% correction is just noise when you're in a long-term bear market like we're experiencing now. Having said that, today I want to take a look at one of the primary indicators that I watch to spot an impending correction or bear market. In recent weeks, the U.S. equity and also international equity markets have continued to push higher and in many cases have moved into heavily what we like to call overbought territory. Basically, this means it's getting ahead of itself. The market residing in this overbought territory should not be an unfamiliar theme. We've had this happen several times within the past year. It hasn't diminished the fears that a correction or some other form of bearish action is on the horizon. In October of 2016, I highlighted the 5 main indicators that I monitor to see if we need to get in a major defensive posture. Today I want to touch on the New York Stock Exchange Positive Trend Indicator. What you're looking at here is a chart of what we call the positive trend indicator for the New York Stock Exchange. Remember, trend analysis is one of the cornerstones of my research. I use these indicators to help understand the current state of the different markets that we're following. The positive trend indicator, or what I like to say PT for short, measures the percentage of stocks in a universe that are trading above their bullish support lines. The bullish support line is a trend line that extends in a 45-degree angle on a point and figure trend chart. Securities that are trading above this support line are in what we like to say a positive trend. Basically, they're going up and they're showing higher prices. For my studies, I found a market that is what I consider to be healthy or in good shape is when the positive trend indicator is at 50% or above. Generally speaking, the market tends to suffer during times when the positive trend readings are below 50%. This simply, as the PT ratings fall, it suggests more and more stocks are moving into a negative trend, which can only be because the prices are falling. For this reason, I continue to monitor the PT charts to see how the various universes are faring and to keep a bead on the trend of the overall market. At this time, the positive trend for the New York Stock Exchange is in a column of X's controlled by demand, sitting at 68%, which suggests the market is currently healthy. From here, the first potential sign of trouble would be reversal into O's, which basically means we've had a 6% pullback in the area of stocks that have traded from a positive to a negative trend. It indicates there are more stocks moving to the downside than to the upside. Not saying the market is going to crash. Even what we have seen happening in today's market, we are still in a healthy market. The market right now is just currently taking a breather. As always, feel free to contact me with any questions or concerns. I can be reached at 440-610-3012. Follow me on Twitter at Balzer Wealth. And also reach out to me on the web, Roger at Balzer Wealth. But please keep in mind, before you decide to make any decision to buy or sell any security, please check with your investment advisor. And if you don't have an investment advisor, please reach out to me. I'd be more than happy to have a free conversation with you. Look forward to seeing you next week. Until then, make it a great week.